Apple is down 4% right now in the after-hour session. In reality, it's simply erased what it gained in today's session, with still a gain year-to-date of 16%. So, Karen, where do you stand on this quarter?
It was okay, right? Just as you said, there was a lot of hype going into the last few hours, which seems, I guess, a little bit overdone. I really want to hear the call, though. I think it's really important to hear what he has to say about demand. Was there enough supply? That's going to be one thing. We always talk about, denied or delayed.
Right.
And so I definitely want to hear that. If demand's waning, that's obviously not a good sign. That's the main thing for me. I thought that the rest was okay, and what expectations were not great, and they kind of met them a little bit, somewhat.
Yeah.
I don't think this will end up being a super important quarter for them. But I do really want to hear the call. I think there's a lot of nuance there. I mean, if you look at last night, that call was good for another additional, I don't know, $17.
Yeah, you talk about the run-up. I mean, listen, when you think of this on a one-year basis, the stock right in and around here is right in the midpoint of that range, right? And so this has obviously been a battleground stock. We've been talking about this as kind of one of the last battles that would be fought in the bear market. I'd say it wasn't a great quarter when you consider the fact that estimates have been coming down. And I think that, this iPhone number really is interesting. I think expectations because of China and everything like that were low, but let's see what the guide is there, because to me, it just might be a thing where China might not be this consumer opportunity for some of our U.S. multinationals. We've been talking a lot about Tesla, as our little cold or hot economic war continues to heat up with China. I just think there's going to be some nationalism as it relates to some products that come from the U.S. here. So to me, not a great quarter. Guidance had come down. The stock trading at about 22 times next year with mid-single-digit earnings and sales growth with kind of flat to lower margins. Not great, but I guess we're in a market where people just don't care about valuation anymore.
I'll say it. They missed. I mean, Apple misses too there, Melms. They missed on revenue. They missed on EPS. Geography in terms of their revenue for the different segments. America's down 4.3% year over year. We know what happened last year. Europe down 7%. Greater China down 7.3%. They missed. It's okay. It happens.
Right. And the stock is only down 4%.
Which is crazy if you think about it.
Considering the run, it should be a lot more. So that shows you
it's a win now. Let's see. We had talked about Apple going to 125. It actually went to 125 in the middle of December. It rallied to north of 150. But this is, you say all you want, it's revenues and all these things. They're now, I would imagine, we're looking at some of the segments maybe better than they were expecting. But quite frankly, if you look at, you said Mac's down. Mac was $7.74 billion. Consensus was 9.4.
Yeah.
That's a miss. It's a miss. Services revenues are now, I think, less than 20% of overall revenue. Not encouraging growth on that front. So at 23 times next year's numbers, it's an expensive stock in this environment.
I think, to your point, it is a win. To Dan's point, January 3rd, the stock was 124. So that massive move into earnings, that was a lot of front loading. Down 3%, down 4%. Let's hear what the call has to say.
Yeah.
This is one of those that I think can fight back from down 4%.
We also oftentimes on the call hear how the current quarter is shaping up in terms of demand. And so it'll be interesting to hear the contours of that, especially with the China.
And no layoffs. No layoffs. They're being judicious on hiring. But the layoff side, who knows, maybe for Apple, if they would have said we're laying off people, maybe the stock wouldn't be down at all. But I think that just stands to how efficient they run that company.
Right.